Good morning. It's Sunday, September 28th, 2025. It's almost noon on the East Coast, almost 9 a.m. on the West Coast. And I'm speaking to you from Vancouver, Canada, all the way on the West Coast. I attended the Metals Investor Forum on Friday and Saturday. I spoke yesterday, closed out the conference on Saturday afternoon, and you'll be seeing that presentation over the next few days, both the live version and a recorded version on my YouTube channel. So look out for that. But this is feeling like something big is about to happen, and I'll tell you why I see this. And by the way, I don't know if YouTube will suppress this video. We'll have to see. I know they've been very sensitive in suppression of content recently. It's getting worse and worse. So we'll just have to see. I'm going to turn the comments off because, quite frankly, it's not worth it for me to have the comments on for these kinds of things. The only people who tend to pipe up are people who want to attack, who have a very entrenched position and don't want to really consider things, objectively and truthfully. So that's unfortunate, but that's just how social media is, right? The people who are intelligent and thoughtful and more objective tend to not really comment. It's the other ones who do. So yeah, that's what we're doing. We're going to turn comments off for a while. So this is JD Vance, the guy who in the Oval Office 6 months ago went on an attack on Zelensky on camera. He has been pro-Russia for years. And he's coming out this morning on various news channels saying that the U.S. is considering sending Tomahawk cruise missiles to NATO for further shipment to Ukraine. It's up to President Trump, obviously. And then he goes on to say that just the reality on the ground is terrible. Russians are losing lots of troops. They're not gaining any ground. It's just atrocious waste of life. Why is this even happening? Why is the war continuing, right? And he's obviously, Trump is pissed at Putin for not making a deal, for not sitting down, having bilateral meetings, trilateral, meetings. He's refusing, negotiations at this point. He's committed to seeing this through to the end, well, whatever the end is. And at this point, with the Ukrainians now effectively targeting the energy infrastructure inside of Russia, it's getting pretty dire. If this goes on for another month, Russia may be down to like 3 oil refineries in the vast country. They're hitting them where it hurts, right? Like when gasoline prices start jumping 25, 50, 100%, then things start to really matter on the ground and inside the country, right? When the war is in Ukraine and the news media is completely brainwashed and biased and paid for by the regime, then the people don't get the whole truth and they don't care what's happening outside of their country. But when it starts hurting them in the pocketbook, in the bank account, and the economy is going down the toilet rapidly, then suddenly it really matters, right? And at this point in the war, every Russian person probably knows somebody who has been killed or has been maimed fighting in Ukraine. And I think even though the brainwashing is very strong, I think most Russians do start to realize that what are we doing? Like what's the end game here? And so it's getting dire, right? And then we have these drones over Europe, Poland, Denmark. Clearly they're Russian drones. They're from Putin's Russia. And so he's antagonizing NATO. And frankly, Trump is pissed. Trump was embarrassed in Alaska. He thought he was going to make a deal. He was all ready to make a deal. And Putin gave him nothing and offered him nothing and went home the same day, right? Trump feels embarrassed. And actually, the best way to, engender Trump's wrath is to disrespect him and try to embarrass him, right? We saw that with like that White House dinner a decade or so ago where Obama was cracking jokes at Trump and then Trump became president, right? Like the greatest motivator is disrespect, right? If you really want a man to come after you, really disrespect him publicly, right? It's usually not a good idea. I mean, like, why would you do that, right? Well, Putin did that to the sitting president of the United States, who is a sitting narcissist, right? Like, not good, not good. So Trump has flipped. Trump and Vance have flipped on Russia, and this is getting bad. So then you've got the Secretary of Defense calling an all generals meeting. So whatever, it's like there's 800 generals and admirals in the U.S. Armed Forces. They all get together in a room. Like, I'm still not clear on all the details of this, but they're putting out the story, right? Like what we consume is the story they want us to believe. And the story is, oh, he was trying to get the generals and admirals, like these guys who are 50, 60, 70 years old, who have been warriors their whole lives, to understand the warrior ethos, right? Like, so the TV star is going to teach these generals about the warrior ethos, these guys who went to West Point and may have even probably many of them served in combat, in Iraq or what have you. He's going to teach them the warrior ethos, right? I don't know. There's something about the story doesn't add up, right? And now Trump's calling for another one where he's going to address the generals. It's weird. It's weird. Either this is a message, a bluff to Putin, right? Which it very well could be. Or it could be both. It could be a bluff and it could also be real. Like, hey, what happens if we give Ukraine all of these high-tech, top of the line, state-of-the-art weapons and Russia starts to lash out? What can we do, right? Like, what's the containment plan for a conflict, right? That's crazy, but I believe that those considerations, those contemplations are absolutely happening right now. And if you don't think so, then you're asleep, I believe. Okay. So this is serious. This is serious. So far, the stock market doesn't really care, right? Like, we had a 3-day pullback. Woohoo, right? This is really nothing. There's not enough damage in the charts to say that the stock market is seeing anything major like a World War III, right? Like, there's nothing close to that in the charts. Even though, like, home builders, we're at the 10% point here in this home builder correction, but it could just end here, right? 10%, that's it. And now we move back up again, right? So I have to watch that. Caterpillar's near the highs, just like the S&P, right? So global economy, nothing to be alarmed about. Deere, so this is specifically agriculture, right? So Caterpillar makes heavy equipment for every industry pretty much, but Deere is mainly agriculture sensitive, particularly in the US. This is getting a little worrisome, this chart. This is now in a very clear downtrend, and it's feeling like it's looking like it's on the brink of a breakdown where this could just drop to like 430 or 420 in a week or something, right? So keep an eye on that, because clearly ag is telling us that something is not going well for farmers in the US. And then there was a headline last week about Trump was going to give some welfare payments to US farmers, blah, 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 right? To kind of like transfer some of the tariff revenue to the farmers, like, because now we have a populist president and the US is becoming a pseudo socialist state, right? And now insider selling. So Barron's publishes this insider selling transactions ratio chart every week. And usually it's just a snoozer. It's usually like 20 or 30. It's nothing. There's no signal there, right? But every once in a while, it gets extreme. And this is one of those times. It's jumped up to 84. I've probably seen it above 80 less than a dozen times in my life, I think. So it's definitely, people will poo-poo this, and I get it. There's no perfect gauge of what insiders are doing, but this is as good as any. If you have a single data point, this one is as good as any. And frankly, if you're balls to the wall long, equities here, and you see that, I think you have to think twice. You have to think about hedges, especially with when you review the first few bullet points of this week's video. There's some things to sit up and take notice of. Okay, it's not to say we're going to have a correction or a crash this week, but there is a lot of complacency out there. There's a lot of overconfident speculators. There's a lot of leverage, a lot of people gambling on options. And the market just has a way of finding a way to punish that every so often, right? And so that's something to think about here. 10-year Treasury yield. So we've had a move up in yields. Remember how the Fed cut in mid-September, just 2 weeks ago? What is the long end yield, the 10-year, the long end of the curve done since? It's gone up, right? It's gone up because the market is seeing more rate cuts, potentially stoking more inflation, right? So this is something to watch because the 4.20% yield level on the 10-year is resistance. It was support. Okay, it's new resistance. We got to watch this. This is an important level. 4.2% is a huge yield level. And we have non-farm payrolls on Friday. So we got the geopolitics. We've got that theater going on in the backdrop, but there is real concerns about the U.S. economy. September non-farm payrolls will come out on Friday. And the consensus is for a modest plus 34,000. 4.3% on the unemployment rate. Those are not good data points. But who knows about this data anymore? Really, I think most people are just going to look at the revisions to the last 2 months. I think that's going to be the biggest market mover. Are we going to see more downward revisions to the last couple of months of non-farm payrolls data, right? We'll have to see. If the jobs number is really weak, if we get a negative print, I would have to think that the 10-year yield rolls over and goes back down to 4%, right? You'd have to think that just the economy is weaker than even feared, and maybe inflation is not the big issue here, right? Maybe it's labor market, the health of the economy, right? And we can talk about AI, replacing people, blah, 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 right? All of this is going on, and it's not well understood, okay? Just the Fed is scratching their head, right? So if all the economists in the Fed are scratching their heads, well, everyone is scratching their heads to understand this. US dollar index, we've had a dead cat bounce. This was a double bottom. 99 is resistance. We'll have to see if also the dollar starts to roll over here, right? So more Fed rate cuts probably means dollar weakness. It's pretty clear correlation, but it's not 100% correlation because also the long end yields matter, right? We saw the last chart. Well, what's happened with the dollar and Treasury yields in the last 2 weeks is pretty much a 95% correlation. The dollar has rallied as yields have risen. So it's really more the long end of the curve, I think, that we want to watch for getting a better gauge of where the dollar might be going. But big levels, 99 on the dollar index, 4.20% on the 10-year yield. We got to watch those this week, especially on Friday, following the non-farm payrolls. Crude oil looks like a triple bottom here, August, September. That looks like a triple bottom to me. Bearish candle on Friday, but one day does not mean much. I know the technicians out there, the amateur technicians who like to lecture me on candlestick patterns and single candlesticks. Yeah, got it, bro. One candlestick means about as much as your opinion and my opinion to the overall stock market. Nothing, right? Nothing. So I put more credence in the triple bottom forming over 2 months, and the fact that if oil can punch through 66, we're probably going to 70. And oil, all right, like gold is the most loved commodity. I know it's a financial asset too, but it's also a commodity. It's a futures asset, right? It's traded on the futures markets. Oil is the most hated commodity, or the most hated futures market. Oil. Nobody wants oil here. Everybody hates oil, right? Well, price has stopped going down. Oil price has stopped going down while everybody still hates it. That means I love it, right? I love oil here. I love OIH here. Yes, it's had a rebound. It's at resistance. I wouldn't be surprised if there's some consolidation here near the 265, 270 area in OIH over the next couple of weeks. Again, maybe we get a really bad non-farm payrolls on Friday. Maybe stuff starts to pop off even more with Russia and whatever Trump's doing with these generals. And, we get a pullback in the broader market. That's fine. I want to buy OIH. I want to be long of this bigger picture. Put me on record, 300 by the end of 2025. 300 on OIH by the end of 2025. That's my call, and willing to be laughed at and look stupid 3 months from now. Okay. And then, so gold, like, what is there to really say about gold? It's a bull market. It's a bull market. And there's no real gauge to say where this rally leg is going to end. Everybody has their way to analyze it, make a forecast. Yeah, I get it. I mean, I think 3,800 is resistance. Okay, I think I can assert that pretty clearly. We should get some consolidation around the 3,800 level, just like we kind of saw last week. But it could easily punch through 3,800 and go to 4,000. I don't have a confident call on the near term in gold. It could absolutely go to 3,900 or 4,000. Is it getting a little extended? Yeah, in the shorter term it is. It's been a little extended, but this is a bull market, baby, and bull markets trend, and they trend until they're ready to stop trending. It's really that simple. There's no crystal ball to gauge when this ends, okay? I would say high probability that we get a correction in gold and gold miners in October, at some point in October. It might not be the first part of October. It might be the latter half of October. Just sort of a seasonal pullback, something to shake loose some of the hot money, to reset the charts and the positioning, and then a resumption of the rally probably in mid to late November, maybe right before Thanksgiving in the U.S. tends to be positive seasonality for precious metals and miners, and then a rally through to New Year's, right? And actually probably into January, quite frankly. That's kind of how I see it. That's my back of the napkin, little forecast for how this might play out. But again, this is just me talking on a Sunday morning. Strong opinions, weakly held. We trade the market in front of us. We trade the charts, and we manage risk. And real traders will understand what I mean when I say those words. GDX, it looks like gold, but it's actually outperforming gold recently. So we have real bull market. Silver miners look even better. And just all the things I said about gold apply to the gold miners, the silver miners. Like, it's hard to forecast how far this goes, but it's a trend, and it's a very strong trend right now. And then copper. So, remember, copper got obliterated at the end of July by Trump 2.0 removing the prospect of tariffs on refined copper in the U.S. And copper dropped the most in a single day, in a single hour, in a single week than it has in history, right? During that week, at the end of July. Since then, it's been consolidating, but gently sloping up. And then last week we get Freeport Max, big Grasberg mine goes on force majeure. So basically it's shut down. They're saying shut down for the rest of 2025 at minimum and potentially well into the first half of 2026. It looks bad. I have no way of determining how bad it actually is. I don't think anybody does. What I will say is it does look bad, very bad. And this is an area of the world that gets a lot of rainfall, that's very isolated, and the mine is at high elevation, right? There's a lot of ingredients that aren't great here for the outlook for Freeport at Grasberg. That being said, this is a company that has consistently impressed with its ability to operate in very remote conditions, doing stuff, building mines that others would not or could not, and operating them very profitably. So if anybody can turn this around and get this mine safe again and back up and running, it's Freeport. But right now the market is spooked. About 15 billion shaved off of the market cap here last week in FCX, and only the most experienced and professional investors should be trying to think about even catching this knife, right? Like there are some gaps down here. It could definitely grind down to 32 or 33, so there could be a little more downside. But then you do have to really look at this and say, is this an opportunity, right? Because we've seen mine accidents, we've seen slides and all kinds of stuff in the last couple of years. And generally speaking, it didn't turn out as bad as it was feared. In fact, in Turkey, at the mine that, what the hell was that called? It's on the tip of my tongue. But anyway, the gold mine in Turkey that had the heap leach pad slide early last year, well, that's about to move back into operation, right? Quite frankly. So it's generally not as bad as it's feared the first couple of days when, the reports of lives lost come out and everybody's like 1 million tons of wet material, basically mud, have covered this thing and damaged a lot of key infrastructure at the mine. How are they going to ever get this cleaned up and get it back up and running? Well, a company with the resources of Freeport is capable of it. It's going to take time, right? But definitely upside risk to copper prices, right? The copper market is moving into deficit, and the deficit is going to grow wider in 2026 and even wider in 2027. So, it's not crazy to think that we could be back up here near the summer highs in the next few months. And so we finish out with juniors, 3 junior charts, Hercules Metals. I want to call it Hercules Silver because I feel like it would be even higher if it had silver still in its name right now. But it's not Hercules Silver anymore. Although they do have silver in the upper plate rhyolite, the volcanic ash that's closer to surface. They do have some silver there for sure. But really, all eyes on the drilling at Southern Flats. It looks like 2 holes still in progress down there with a third one about to get underway based upon the company tweet last week where they're doing an RC pre-caller for a third hole into Southern Flats. So it's all hands on deck there at Southern Flats, investigating this very large, very pronounced, and somewhat deep MT anomaly in Southern Flats that could be the source of it all. The quote unquote mother lode. We will have to see. But the chart is looking better. The stock traded very nicely last week, pushed up after a consolidation around the 80-cent level, closed at the high of the week at 87 cents. And all the technical indicators, volume accumulation patterns, look positive. It looks like accumulation to me. So there are buyers in this stock the last couple of weeks who like the prospects, the potential for a major new discovery there at Southern Flats. And I like to use this rate of change because the rate of change is barely in positive territory, right? So it's still early. If you want to see what a breakout looks like, this is what a breakout looks like. That was October, November 2023. And you see the rate of change went apeshit. Emerita Resources. So this is also why I turn off comments for this post, because I can't say anything right about this stock, right? If I get too bullish, the short sellers are going to attack me. If I add some caution and say I don't have great confidence in the Spanish court system, then the assorted diehard permabulls cult following of this stock are also going to attack me. And I say those words with respect, okay? I just want you to know that I don't have a dog in this fight. I followed the company for 4.5 years, okay? So don't try to talk down to me saying I haven't done my due diligence, I don't know what I'm talking about, blah, 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 because you're wrong. I have. I understand there was wrongdoing here. There was corruption. There was bribery. I get it. If the rule of law was upheld according to the letter of the law, exactly by the book, most likely the AZN asset, the mine, would be awarded to EMO. I agree. But where I don't agree is that this is the stock market, and this stock could have wild moves in the near term. And the three judges who are about to rule on this pending case are human beings, also prone to corruption, prone to bias. And we just don't know, right? We just don't know. I don't even know who these people are, quite frankly. And I don't know if any of you understand what's in each of their brains right now. Okay. And so this stock could have absolutely wild moves. You know, could it go back down to $1? Could it go back down to 50 cents? Absolutely. Could it go to $4 or $5? Yes, absolutely. And so why do we look at the chart? Because the chart is the consensus of everybody who's trading the stock. And so I found this very interesting, how it moved up in August and then it consolidated near resistance throughout most of September. To me, that's an ascending triangle, shorter term. It's also testing a key resistance level for the 5th or 6th time since March. And I know the energy is building there and the potential for a breakout was starting to move in the favor of the bulls here. So I took a trade on it last week. I'm long EMO here. I could be out of it tomorrow. I could be out of it Tuesday. I don't know. I'm going to trade the chart and maybe I'll get obliterated by a halt and then a bad ruling from Spain. I don't know. I'm willing to take the risk, but I'm also trading this. So I'm not a diehard. I'm not committed to any side in this. I'm just trading the chart. And maybe some of you hate me for it in whatever weird, twisted logic you have, but I'm just sharing my opinion on this, and I'll leave it there. Good luck to everybody in Emerita. And then finally, Talon Metals. So this is pretty cool how this is cooled off. It's cool how it's cooled off in August and September, because frankly, in early August at 43 cents, it was a little extended, right? So the chart, the stock needed to rest. So maybe it's great the company is being a little quiet. They don't do any marketing. They help to reset the chart. They're doing good work. But now we're moving up again. And there's evidence last week that the consolidation is ending and maybe the next leg higher in Talon is beginning. And it's probably time that we do hear from the company, right? So I predict in the next week, maybe 7 to 10 days, we do get a news release from Talon. It's probably going to be an update about drilling in the vault zone, maybe some assays, maybe some other things. Who knows? I'm pretty sure this company is working on a lot of stuff in various areas, including feasibility study, permitting, and exploration in Michigan and Minnesota. So long Talon Metals. By the way, I'm long all three of the stocks: Hercules, Talon, and Emo. Long all of them right now. and may buy or sell at any time in the future without notice. And that's it for this week's video. Thanks for tuning in. If you like this, even though you may not like me or my opinions on different things, please hit the like and